Good morning, guys. Okay, so Friday saw a bit of retracement, some heat coming out of the stock market. VIX, I don't think, did much at all. And we saw the bonds also retrace a little as well. As you can see there, the 2 years are up, 10 years up as well. So, but the overall, obviously, we've seen the market retrace thanks to some good data coming out of the US in the inflation figures last week, where inflation was coming off, but the economy is still strong. So it's that crash landing of a recession is obviously dissipating, or the threat of a crash landing is dissipating, and it may just be a soft landing after all. So that's happening, and that's where we're seeing those interest rates peel off, because the market's now only looking at one more rate rise in the US this year. That's in the July meeting, which is 10 days away, and then no more interest rates, and in fact a interest rate cut coming in January. So we're starting to see that shift of sentiment there, from that obviously higher rates, but maybe not for as long as we were expecting. What that means for currencies? Well, US dollar has been pummeled. There's only one way to say that. As we can see there on the daily, it's just got absolutely smashed. It will come back and fill some of that in, as you would expect. I'd be looking for it to come back up to sort of this area here, and then we'll have to reassess where things are going, but that's going to be a resistance level now. Looking at, we'll go across to the Aussie dollar. That round number was just too much for it, 69. Aussie loves the round numbers, as you can see here on this chart, and we'll be tracking back towards 68. Euro dollar also should be coming off. It's way overheated, and I'll be looking for it to come back to sort of around this 110 level, and finding support there. And the cable should be coming back to around this 128 and finding support there. Dollar yen bounced nicely off this support level, and I'd say resistance will be around this area, around the 141 target. Other than that, looking ahead, we've got some data to be mindful of. Today we've got the Chinese GDP. Tomorrow we've got the Canadian inflation numbers, US retail sales, minor numbers, Aussie unemployment. You'll get some volatility if you're trading on the 5-minute or lower time frames. All of those numbers this week will provide volatility for you, but on the daily time frame, it shouldn't be that dramatic. So I'll be back tomorrow, but yeah, trade accordingly.